Hey, what is up, everybody? Hunter Orell back with another great interview, today joined with the founders of Tari. Now, if you have any concerns about the privacy of your transactions, if you have interest in learning how easy mining can be, and what the contrarian take to what blockchain could look like in the future, this is a great conversation. I think you'll greatly enjoy it. For those who are wondering, Tari is a new L1. They have mainnet coming up in just a few weeks. And again, they are a privacy focused new L1, and it is a good conversation. As always, thank you for tuning in and watching these conversations. It means the world to me. And a special thank you to our sponsor for today's episode, Loot.gg. If you're looking for a next generation trading terminal, look no further. Go check them out at Loot.gg and sign up for their closed beta today. And without any further ado, here is Tari. What is up, everybody? I am here today with two of the founders at Tari, which is a new L1 blockchain that is coming out mainnet very soon, coming this month, April. And I think more than ever, Tari is hitting a point that I think has been overlooked for so long. That's interesting, which is around the idea of privacy on the blockchain. Right now, everything is so open ledger, and it's almost inherent. You expect like, oh, somebody does something, I can see how much they have in their wallet, I can see how much they're making, I can see what they're buying, and at the end of the day, like, do we want everything to be fully transparent? I'm not sure if that is the case, and you guys are, I think, really asking that question and addressing it. And there's some other points here that are very interesting around proof of work. There's around how do you make mining easy? How do you? There's all these very interesting conversation points that I would love to get into. I think, firstly, though, a little bit about you guys, introductions, and then why Tari.
Do you want to start, Fluffy?
Sure. I'm Ricardo Spagni, also known as Fluffy Pony. I've been in the space a minute. I started with Bitcoin in early 2011, built a bunch of things along the way, did a bunch of stuff in the mining space in the early 2010s, eventually created and built or invented and built an open air flat packable stackable mining rig. And from that, got involved with Monero at its outset in early 2014, built a bunch of other things, and that brings us to where we are today.
Amazing.
Yeah, I started off studying computer engineering at Purdue. I dropped out. I could only get through 1 year there, so I didn't last very long. But then I bootstrapped my first company actually in the music space. So I got this like crazy opportunity to do some work for Linkin Park, running their like website and collaborating with them on their fan club and a bunch of other things. Did that for a long time, and then had the opportunity to work with a lot of other amazing artists like the Killers and Bon Jovi and Carrie Underwood and many others. I bootstrapped a logistics company, put a project of mine, through Y Combinator. So I've been around the block, built a lot of different things, tried to run lots of experiments, failed a bunch, failed a whole heck of a lot of times along the way. And then got into crypto in 2016, actually as a Monero miner. And that's how I met the esteemed Fluffy Pony. He was in LA at attending a Monero meetup, and we had lunch, and we realized that we had a lot of the same ambitions and dreams and goals, and we're very much cut from the same cloth in many different ways, and decided to start contributing together to this new thing called Tari.
Incredible. I mean, at the end of the day, I think it comes down to, you guys are builders. You guys are people that ask questions around how can I do something differently, better, faster, address a problem that hasn't been addressed quite completely. And I think Tari at the end of the day is the product of that questioning, of you guys looking at, all right, here's the entire ecosystem of crypto. A new L1 needs to come around to address some oversights.
That's right. So I think that we always try to look at things from a first principles perspective. So when we were thinking about Tari and thinking about, okay, yeah, like, why does the world need another L1? There's a cajillion L1s. Like, why a new L1? What about the existing L1s makes them deficient in some way, shape, or form, or creates opportunity to create something that's not incrementally better, but something that's exponentially better, right? And it really came down to three core things for us. So there are like three things that really make Tari fundamentally different than everything else out there. So the first thing is accessibility and usability. So one of the things, and Ricardo has the same experience in some of the businesses he's built in the past too, but there's this basic concept that the more friction you add to like any user process or user journey, the fewer people are going to do it, right? It's like
Crazy concept.
crazy concept. It's pretty damn obvious. We would think that it's pretty darn obvious. And yet, for whatever reason, in crypto, we continuously design these really, really, really complicated systems, really complicated processes, and expect lots of people to do it. And then when we talk about these things, we say, well, this is just how it is, right? So a good example of this is the onboarding process now for proof of stake systems, which unilaterally requires KYC, right? Like, because somehow, some way, you have to get tokens in order to participate in a proof of stake system. How do you get those tokens? You have to buy them. You have to buy them. And in order to buy them, it's a financial transaction. And that means now you're going through this whole like KYC process, liveness check, all this stuff. And that creates this extraordinary barrier. So, we've done a bunch of research on this, and the shortest onboarding process we found was 15 steps, right? 15 steps. So, which is crazy to think about. Like, when you think about that, and it includes a KYC step where you're actually having to present government issued ID, and the drop off rates on this stuff are just nuts. Like, and no one wants to admit it. Like, none of the on ramps ever want to disclose the data. No one ever wants to actually talk about this because it's really bad. Like, it's really, like, if anyone knew how bad it actually is, then people would all of a sudden be like a lot more bearish, on these systems, right? So you'll never see on ramps talking about their conversion rates or any. It just doesn't happen. And so, okay, from a first principles perspective, well, how do you minimize the number of steps? How do you design a system? If you could start over, if you could say, oh, all right, we don't need doesn't need to look like an existing animal. It can be a new animal.
Sure.
Well, how would you design the system to make it easier for people to participate and still be Sybil resistant and allow people to get tokens and allow them to participate in the easiest way? And so when Ricardo and I started like having this grand debate about like, okay, well, how the hell do you do that? There was one answer that became very clear. I was like, wait, this is the way. And the answer is proof of work, right? The answer is proof of work. So why? Why is the answer proof of work? Well, if a proof of work system is designed properly, it can actually be designed to be ASIC resistant, right? So if you think about classical like Nakamoto consensus, like, Bitcoin style, well, the problem is that, Bitcoin requires custom silicon in order to mine it. You need ASICs in order to mine Bitcoin profitably. Otherwise, you're never gonna mine any Bitcoin, really. It's like,
right.
It's like a lottery.
I mean, I remember the first time I was like, oh, I want to mine Bitcoin. And then I was like, okay, if I want to do this actually competitively with like any chance of making real money here,
Yeah,
it's a real financial investment.
100%. So imagine a proof of work system that is ASIC resistant. So you can mine it on commodity hardware. You can mine it on your laptop. I'm on this call with you right now on my laptop, and I'm mining Tari at the exact same time on the same device, on the same machine. So you can still do your work, still do stuff while you're mining. You can still, whatever. It's beautifully designed. It's incredibly easy to use. So it's 3 steps. You download the app, you install it, you run it. It automatically creates a wallet for you, automatically connects to the network, automatically syncs state, automatically joins you to a decentralized pool We have a native P2Pool implementation baked into the system.
And we got to talk about that. I think that for me, when I started digging into it, was like, I didn't realize how significant P2P pool was to
Yeah.
have integrated. It's also not trivial to integrate in.
No.
So it also explains
Definitely
why,
not.
like, when you look around, it's like, okay, this is why everybody's not like in the proof of work world isn't just integrating this like overnight.
Yeah.
I mean, explain. I think the mining, we can't overlook the mining perspective of like how you guys have reduced the friction to it.
Yeah. Rick, you want to take that one?
Yeah, I mean, Peter Pool, I think is really interesting because basically one of the challenges that you see everywhere, and Bitcoin, by the way, is susceptible to this too, is the risk of a single mining pool, or with Bitcoin, several mining pools that appear to be different but all operated by the same entity, getting a very large portion of the hash rate. It's a danger that's well known, it's well documented. You'll see sometimes, like historically, when a pool has gotten close to like 40-45% of the hash rate, then there's like this call for miners to go to other pools, because of the risk of 51% attacks.
Yep.
And frankly, even something as large as 15% is dangerous because it just introduces risk. There's all sorts of things from censorship. A pool can decide to censor transactions, which we're seeing. I mean, there are OFAC compliant pools, with it's the most absurd thing in the world, to just additional information that I don't think anyone needs to know, like oh well, this miner, this is his IP address, and this is the address that he's mining to. Information like that that's kind of dangerous. And there've been attempts at fixing this through leveraging various pool technologies, but ultimately the risks is still there. The risk is still attached. And so P2Pool just blows it up, and it says, what if pools were decentralized? What if there was no, I mean, nothing stops you from solo mining. Nothing stops you from having a centralized pool. But what if the bulk of users use P2Pool? And P2Pool basically runs almost like a side chain for each pool, each group of miners, and they all come to an agreement about lower difficulty shares that are mined, which is the same that a centralized pool would do, but on the share chain. And then ultimately, when they solve a block, then that share chain is the proof of which miner did a certain amount of work, and they get paid out proportionally. And it's all consensus driven, so no one can cheat and be like, oh, I want to get paid out more. And this is really old tech. This was proposed and implemented for Bitcoin in 2011. So this is not new. It's just been, I think, very overlooked, very ignored. The largest P2Pool base today is Monero, which is sub 1,000 miners, but still significantly bigger than any P2Pool base Bitcoin has ever had. And yet it's such a vital technology. And the primary reason that it's not been successful has been because it's so difficult to set up. It's so difficult and challenging to use. Even for more sophisticated miners. And so it's kind of been mired in a usability issue. And as a result, the upper bounds of what can be done with P2Pool hasn't been tested. So, there's this whole aspect of it that's almost like unexplored because there's no domain experts that have been able to do that.
Right. And you guys, it seems that from the testnet side, you guys have started to get above those previous bounds and get thousands of users using it. I can say from personal experience, I was mining daily at a machine that was just isolated and running the miner. It takes a few clicks. You literally download a centralized program that has your apps, your wallet, and the miner all in one app. You can just click start mining. It starts mining for you, and you get paid out. And yeah, I think anybody can do it. You don't need to be an expert. You just literally need to understand how to click download and sign up.
Yes. If you know how to install an application on a computer, then you can use Tari Universe. And I think that's a very important point that you raise, because that is therefore the lowest bar that one can possibly have for someone to become an on-chain user. In our industry, we like to talk about onboarding the masses. And we joke internally that you're never going to onboard the masses if you're going to route them through a KYC flow. Like, that's just bullshit. Not going to happen. But if you can make it so easy that people can just download free open source software from the internet and install it on a Mac or PC that they already happen to have, well, hey, you got a better shot. You got a better shot of onboarding a heck of a lot more people that way than you do running them through the gauntlet of KYC and crazy onboarding flows that everyone thinks have to exist because that's the only way. It's the only way is the Solana way or the Ethereum way. It's the only way, Hunter. It's like, well, no.
Well, it's so easy, but I think a lot of people are like, "Oh, it's so easy. Other people are doing it. They're making millions. We'll just, we'll do a 5% different product, and we have a higher chance because everybody's like, oh, that other thing did well, and this is a little bit better, so this might do a little bit better." Like, you guys have taken such a riskier approach to building in the space, which again, applaud it. I think I love that you guys are so contrarian to the current meta of things. But like I said at the beginning, all of a sudden this has become everybody's like, well, actually, this is the the outlier, and we should look at the outliers as being possibly the new leaders in the space.
So I think there's a lot of confusion in the industry about where value comes from. Right? Like what actually makes something valuable, whatever, token, NFT, like whatever it is. And our hypothesis is that value comes entirely from emotional connection. When a human being has an emotional connection to something, they deem it to be valuable. And it doesn't matter whether you're a person who's into cars, a person who's into watches, a person who's into baseball cards or Magic the Gathering cards or Pokemons or whatever it is. Why do these things have value? Well, because there's a bunch of humans around it who genuinely love them, and it's more than speculation to them. It's something that they like actually have passion for. And the hilarious thing about crypto is that instead of making it an emotional thing for people, we constantly make it a logical thing. So we'll say things like, well, look, guys, you should buy the token because it has a burn. The supply is going to be lower. And I start thinking, I'm like, okay, logically, I get that. But why am I making the emotional decision to buy the thing in the first place? Because universally, human beings, when they choose to buy something, it's an emotional decision. It's not a logical decision. It's an emotional decision. So basically, the way that all these things are constructed, we think is frankly largely like not actually compatible with how human beings work. And therefore, it's very difficult. Think about it this way. You've been in the industry for a long time. The last 12 months, I think, have been a very interesting time for our industry. You have on one hand, regulatory clarity and like administration here in the US that's very pro crypto and bullish, all these things. Put the macro aside for a moment. And that's like one part of it. On the other hand, over the last 12 months, the majority of tokens that have debuted on the large centralized exchanges that have this traditional proof of stake orientation of 50% of the supply owned by investors and the team, low float, high FDV. Look at the charts, man. It's been like this, for most of these things, right?
Yeah.
And it's very, very difficult for these projects to build any form of emotional connection. With Tari starts in a completely different place. It's completely grassroots. You download the software. It's beautifully designed. That's objectively true. It's incredibly easy to use. You're putting in the work. The average session time for a Tari miner is over 5 hours a day. There's thousands of people concurrently mining on the network right now. Almost 60,000 people have downloaded Tari Universe just in the last couple months. And it's completely organic. There's no paid shills. There's no, VCs talking about it on the timeline. There's none of that. It's not about that. It's about, hey, let's actually start over and build something that is more foundational and fundamental and elemental in nature. And let's start with the idea of trying to build something that people really fall in love with
Hmm.
and build an
Yeah.
emotional connection to. And therefore, that's where the usefulness and ultimately the value of the system comes from.
I certainly can get where you're coming from with the like fall in love because it's when you reduce all that friction, it's very easy to be like, oh, that's so simple. It's so,
Yeah.
it feels light, it feels fresh. And yes, I totally understand that. But value at the end of the day, like fundamentally, there is a like a fundamental for having value of like it does X, Y, and Z, and it will generate this much revenue, and it's attracting this IP and these builders. And so I think it's a balancing act, but to an extent, like you're saying, like we're coming at from this almost in a way where you guys are like not prioritizing, but you're making sure that that is one of the pillars instead of an afterthought to how
Yeah.
you're building. Okay.
Well, let me give you a, let me just nudge there a little bit on this.
Okay.
Okay. So, let's take a publicly traded company like Amazon. Okay.
Sure.
Back when Jeff Bezos was CEO and running the company, Amazon lost money for years, and pre AWS. Amazon, I don't think there was a quarter where it made. I could be wrong on that, but I
And
don't.
it might have had close quarters or
Yeah,
very
but
slightly in profit, but it before AWS, no,
yeah.
it was a
So if you're looking
loss.
at it from a fundamentals perspective and say, well, okay, Naveen, what's the P/E ratio of the Amazon stock, and what's the, what's their EBITDA, and what's their like? It didn't matter because there was a person. Okay, there's a person. So people were betting on Jeff Bezos, who's a legendary leader, an icon. So in that case, there's like a persona. There was a vision, right? Like obviously, Amazon is inventing amazing things. One-click checkout, Amazon Prime, Kindle, AWS, the advent of AWS, and all these other things like over the course of time. And
Yep.
clearly, there's this like huge thing kind of brewing. But to say that, like, I would argue that fundamentals are just as much of a meme as anything else. And really, at the end of the day, the person who's buying Amazon stock when the company is losing money quarter after quarter after quarter is still making an emotional decision because there are no fundamentals there either. You're looking at something that is supposedly growing in all these ways according to their own metrics, but it's still an emotional decision when you're buying a stock like that. Look at something like Tesla. Tesla is another great example of now you've got this like polarizing situation where, do I like Elon? Do I not like Elon? Well, maybe that depends where you are on the political spectrum. Maybe it depends on something else. Who knows? And okay, I think Tesla is absolutely a meme stock. Like without question, it's a meme stock. And it really comes down to how emotionally connected you feel. And if you feel emotionally connected to what's happening at Tesla and Elon's vision and his brilliance and all these other sorts of things, then maybe you're an owner of Tesla stock. But if you don't, then you're not.
Yeah, I think it is. I think there is. It's a spectrum of how you value something, and I think at the very top layer of that is how do you feel about it, and what it. Do you like it? Do you want to own it? But the nice thing about crypto is that nothing is 100%, right?
Sure.
Like we've seen, you can have things that are like, hey, we are a revenue focused chain, and that's that is how we establish our base layer. But then you have things like, Pepe or Doge, and they are memes. They are
Yep.
how much do you like the meme? Um,
Yep.
I wanna maybe transition to a topic that you brought up there, which is around Bitcoin and the early days and how things have been done.
Yeah.
Um, and in some ways, again, back to this idea of privacy, Bitcoin has been around and set kind of the standard for like this is the OG way things have been done. And I think for the most part, the majority of every L1 that we've seen pop out has kind of been a flavor of that. This is an idea, everything by default is private. Um, which feels like it's a very, again, contrarian to the initial thesis of open, visible, provable. Still have the provability part.
Yep.
Blockchain is still there, but let's say I'm a business and I want to figure out how to pay salary in crypto because this is the pitch you gave me. I'll never forget. We had a very interesting conversation, probably back in like July or
Yeah.
August last year, And you made this point, and I thought it was very interesting. Do I want to pay everybody's salary on Bitcoin or Ethereum or Solana?
Yeah.
No, because immediately I've just basically doxed everybody's salary. You need a better solution. Um, you guys solve that. I think the question I'm trying to get at is explain the privacy part, explain who you're trying to hit with that, and who the target kind of like builders and users around privacy that we probably haven't even seen come in might see this and be like, okay, that is an application. All of a sudden, blockchains become application for us.
Yeah. Rick, do you wanna start that one?
I think, I mean, I'd love to hear your take first, and then I've got some stuff I want to add to it.
All right, Pony. All right. Okay, so I think there's a couple different ways to view this sort of privacy conversation. One is there's an ideological perspective here, which is how do you define freedom? Can you really be free if everyone can see every action you've ever taken throughout your life? What does that mean for people in terms of freedom? What does it mean in terms of self-censorship? Like, if does it become a panopticon where because everyone knows that they might be watched, it starts to change their behavior. Like, okay, maybe I don't want to buy this thing or donate to this cause or participate in this way, vote in this way in a DAO or do these other things because, look, I might be watched here, so I kind of can't be my true self. Well, if you can't be your true self, are you free? Is anyone on Ethereum able to be their true selves? I would argue not really, because of the design of the system. I think that to throw it back to Bitcoin, look, there is a small section about privacy in the Bitcoin white paper. I think Satoshi very clearly cared about privacy and commented on Bitcoin Talk on a number of occasions on privacy and the importance of even adding more privacy to Bitcoin. And in fact, if you read the section on privacy in the original paper, he talks about ways for people to achieve more privacy with Bitcoin, and gave some specific ideas. A lot of the technologies that have been built around privacy in this industry are really about essentially automating those ideas, right? So his idea of like ensuring that you have essentially a fresh wallet, if you want to, or a fresh address, for every single transaction. It's like, well, okay, in Monero land, you've got this sort of ring signature scheme where that's like you essentially get lost in the crowd, with every transaction you do. There's these sort of false outputs, within these decoy outputs within the Monero world, and therefore you have plausible deniability. Like, which transaction is yours in sort of this stream of transactions? No one knows. A lot of it is sort of automating the original ideas that Satoshi had. Put the ideology aside. Now let's talk about the reality. Real world. Privacy is about safety. I mean, on what planet do you want everyone to know how much money you have, as you're walking down the street? That's crazy.
It's been a real concern for a lot of people. Yeah. A real concern.
It's a massive concern. And as you see in our industry, more and more people, getting their homes invaded. The executive at Ledger had their finger chopped off. I don't understand why people think it's a good idea that you can just Google any Ethereum wallet address and see the balance. Like, on what planet is that a good idea for individual people?
I mean, the idea of privacy on Ethereum is sending capital to a centralized exchange and then sending it from there to a fresh wallet.
Yeah.
And, are you at that point, you're still kind of like doxing that new wallet to the centralized exchange, but nobody knows. But that is the user experience of like, okay, I have an Anon wallet all of a sudden.
Well, the idea of privacy on Ethereum is weird. It's a optional privacy regime always, right? I don't care if it's Vitalik's mythical privacy pools concept, which is one of the dumbest ideas we've ever heard of in our lives. I don't care if it's oh my God, here's a new L2 that is the privacy L2. It's still optional. You've got to move funds into it in order to get the benefit. I don't care if it's a mixer like Tornado, you still got to optionally use it. It's not default. So now you're making a choice. Well, who gets to use those things? Does everyone in Vitalik's privacy pool world? It's like, well, sorry, bro. If you have some bad coins in your wallet, you can't use it. It's like, well, who decides what's a bad coin? Who decides what's a bad address? Who decides what parameters, allow you to gain access to privacy? And why does privacy become a privilege thing, right? Like, why isn't it just available for everyone?
Yep.
Right. So you have all these very weird thoughts in Ethereum land. Like, it's a bunch of academics sitting there trying to contort themselves, like, well, we're trying to comply, but at the same time, privacy. It's like, bro, take the trade-off. There's a trade-off here. If you're going to create a system that is pro-human and pro-freedom, it has to be default private. Has to, right? And the final thing is the business dimension, which we talked about on our call, which is, wait a minute here. If you're trying to build a system that ultimately other people are going to build on, there are two business issues, okay? First business issue is, do I get to own my user base? So what Ethereum and Solana and all the other protocols have said is that you don't. You don't get to own your user base because anyone can vampire attack anyone else's user base. You build a really successful dApp, great. Within seconds, I'll have a dashboard on Dune, and I'll be able to stack rank your users by volume, by by holdings, NFT holdings, token holdings, and I can vampire attack that user base until the end of fucking time, and there's nothing you can do about it. And when you kind of zoom out and think about that for a second, you start to think about even publicly traded companies. Are they like actively disclosing their entire customer lists? Like, do we know Amazon's customer list for AWS? I mean, we know some marquee customers that they have on their
Right, but you don't know, okay, here are all the vendors for, beach towels. I don't. Yeah.
Okay, Delta Airlines. Hey, Delta, can you stack rank your diamond medallions for me based on revenue?
Oh, that's crazy when you ask that question and then you think about how things are right now, how insane that sounds.
Who the fuck is going to do that, Hunter? Who? Name a business, name a single business that is actually going to do that. And the answer is doesn't exist. It doesn't exist. And so then you start to think about it, okay, well, why are these systems being built? Like, who are they being built for? And then you start to get into the weird field of dreams conversation. You start to say, well, if you build it, they will come. And you're like, well, who's going to come? Who? If it's not real businesses who actually like need to protect their information, they need to be able to build a moat. So the cool thing about something like Tari is like, well, look, it's default confidential. Let's pretend like you build an app on top of Tari and you're very successful at acquiring lots of Tari users to use your app. And say Ricardo comes around and goes, wow, Hunter's built a really dope app. I'm going to make some incremental change, copy pasta, one click, copy paste, and I'm going to launch the same thing. Well, how does he vampire attack your users? Well, he can't, right? So now all of a sudden, you can actually have value accrual on the app layer. Think about it. All the VCs in this industry, they're not investing in apps most of the time. They invest in protocols. Why? Why do they invest in protocols? Because that's where the value accrues. The value doesn't accrue usually on the app layer. And that's why you have essentially this barren desert of apps where the only way apps get funded is through fucking grants. That's the only way it happens. And so we've got this like very weird, perverse set of incentives and this unbelievable adverse selection problem that no one wants to talk about because God forbid you talk about it and you're putting your bags at risk and you're putting some of the core assumptions, the foundational assumptions that everyone has staked their claim to at risk. And no one wants to have that conversation.
It's such an interesting way to look at it. Again, if I'm building a service, all of a sudden my users can be vampire attacked.
Yeah.
But the same way, like I think we've kind of seen this with like OpenSea even has just launched like a loyalty program where like if you have items listed on another exchange, you don't get as many rewards, which again, it's they're utilizing the current landscape, but again, a real business, are they going to move from Web 2 to Web 3 and be like, okay, that now all of a sudden our users are at risk of like using another service, or
No.
it's very interesting.
Who's gonna do that? Name the one business that's gonna do that, Hunter. I want to know. I want to meet them. I would be like, you know what? It's got to be like a charity thing. It's got to be like, look, man, I built this whole thing, and I just want to share. I just want to be open kimono with everyone. You want to steal my customers, Hunter? You want to be able to stack rank my customers by customer? Did you know that I have a customer concentration problem? Did you know that 40% of my revenue comes from these like 5 undisclosed customers over here? Yeah, did you know that? Well, now you do, and here's their information. You can just fucking call them. It's like,
but in some sense, it's like, okay, but that's just I think we've accepted, like, that is, if you want to participate, if you want to build on ETH, like that's the way it is.
Yeah, but it limits. It's a limiting factor in the success of the system. That's what we would argue. We would argue as Tari contributors that, okay, that's fine. Look, that's cool. You wanted to design the system that way. That's your call, all good. But we think that limits the potential of the system, because we think there is a smaller group of people that are ultimately going to be okay with that. And there's a far greater number of people that would want to be able to build a moat around their business,
right,
and keep these transactions confidential and be able to run a business in a manner where not everything is exposed, because otherwise it's very, very hard to run a darn business.
Right.
I'll take it one step further. I have a core belief that I've discussed publicly before, but it bears repeating, and that is that not only are these systems hostile to business, but I think ultimately they're going to be hostile to regulators. And it's funny because right now we're like, oh, regulators don't like privacy coins. What happens when regulators wake up and go, oh, GDPR, right to be forgotten, California Privacy Act, POPI, all of these privacy enhancing laws are unenforceable on blockchain systems that do not have privacy. Like, then it becomes frightening. Not only is it problematic from a regulatory perspective, but we have seen in more recent years a really interesting thing, and that is that users suddenly wake up. Suddenly. Like, one day they wake up and they go, Facebook has all our data, and there's a mass exodus. Okay, now sometimes it's dumb and there's a mass exodus to Instagram. So that's just, out of the frying pan into the fire. But like, it's still interesting to see. We see young people go, oh, we're gravitating towards Snapchat because it's ephemeral. Okay, now they're not really going like, oh, it has end-to-end encryption, but they're going, I don't want my messages permanently stored,
right,
on someone's device.
Right. I want to know if somebody takes a screenshot. I want
Exactly.
to have understanding that my privacy
Right.
and the things that I'm creating or sending or transacting, they're
Exactly.
yeah.
So my thing is like, what happens when users wake up and go, oh, everything I'm doing is traceable on Base or SWI or Mega ETH or whatever the flavor of the day is. And when there is that awakening and someone writes an op-ed in the New York Times and it goes viral, or there's a viral TikTok post that goes, did you know everything you do on Ethereum can be traced? And it just blows up and has 10 million views, people will en masse walk away from it. Because that's how it works. It just takes that one little girl or journalist or whatever to like evoke the emotion in them, and they will walk away, and it'll be as a land full of crypto zombies, and all of the retail users will go to other chains that have privacy. And that's the reality in the future that developers and designers and architects of these systems fail to see.
I have one other add to what Ricardo was saying here.
I love this. I love this, by the way. So keep bringing it.
So I have one other little thing here. So you know, obviously people love to speculate on crypto assets, right? Like that's a dominant thing that people do. They love to go long and short and leverage, and leverage is bad, but leverage, they love to do all these
They
things.
love their leverage.
They love it. They love their leverage. Think about like all the vast trading shops and hedge funds and all these companies out there, and how they typically trade, in public equities markets where, things are meaningfully more obfuscated than they are in our industry, and they're able to implement their own strategies. Here in this industry, you have tools out there that are built, where bounties are paid to discover wallets. It's like, oh, I really want to know who, I really want to know this investment firm's wallets. Oh, I'm going to pay a bounty on Arkham or whatever, and I'm going to figure it out. We've built this industry around pocket watching and playing this like cat and mouse game of trying to find wallets, right? And that's a whole part of the business. Well, imagine a world where like those firms can actually come on and trade and have their own proprietary strategies, and they can still trade majors as synthetics or whatever it is. What platform are they going to choose? That's why they continue to trade largely on the centralized exchanges, because the centralized exchanges offer some additional dimension of confidentiality.
Sure.
Okay,
And
so
we've seen the counter to this a lot recently, where it's like, okay, that wallet is 17 million P&L for the month. They have a strategy. I'm just gonna copy it because they're doing well.
100%, 100%,
It's great for me, but for them that might now
not good.
it's an issue because they're like, okay, that our strategy is inefficient because people are following it, and yeah.
Well, you also have strategy honeypots where literally people will create a wallet, implement a strat, know that it's going to be followed, and then meanwhile they're trading against the strat in other wallets. So you have all this predatory shit going on. Okay. Then you have another thing happening, which is agents. What do they call it? Agentic. It sounds so majestic. Agentic, startups, and using LM models for all kinds of things. This is actually a fun thing to do. Go on like Claude or ChatGPT or whatever, and ask the question. Say, hey, look, ChatGPT, if you were a trading bot, and you had a choice between a default surveillance blockchain that has all the same capabilities as Ethereum and something that's default confidential, which would you choose? 100% of the time, the AI agent says default private. 100% of the time. Like literally 100% of the time. And why? Why? Well, it makes sense. Because if you have an army of agents running on these systems, which is like now the thing that all the like Ethereum people talk about, it's like, well, wait, you end up in a world where, these agents essentially lose effectiveness as they start just like copying each other. And you want the agents to be able to operate in a way where they're maintaining their duty to their creator, in the best possible way. And so when you think about Tari's potential in the future, you say, okay, well, wait, okay, the system is built to be default confidential. Now, it also has programmable confidentiality features. So, for example, we won't announce this officially, but you could have a world where there's actually a stable coin issued on Tari, for example, because the issuer of the stable coin can have full visibility into the TX graph for their token and therefore comply with all their money transmission licenses and other regulatory things, but it's still default confidential peer-to-peer, right? So you can have these hybrid scenarios too on Tari that create like very interesting potential outcomes in the future, right? So it's kind of a very unique system design that, to your point, everyone in the industry is kind of zagging and we're zigging over here, kind of going in our own kind of direction. The whole Tari community is kind of going in this other direction, and we'll see. We'll see. Is it a direction that more people ultimately want to go into, or not? Time will tell.
Right. It's again, it is such a fascinating moment for the idea of this privacy, and I even asked somebody because of something I'm building, and was like, okay, everything is just so public now, and is it always going to be public? The idea of privacy becoming more and more important. I ended on a different note, which is instead of building an L1, there has been a new implementation of like how do you keep like how are certain people handling privacy and verifying that something's actually doing what it should be doing, even though you can't see it. Do you have a counterpoint to like why like Ethereum or these L2s can't like where do TEs stop? Right? Like TEs offer this idea of like there is like you can't access and see it, but it's happening. We know it verifiably. Um,
Yeah.
I mean, what's the counterpoint for like for that? Because I think some people
Uh,
would be like, okay, why don't we just use TEs for some of these transactions?
yeah. Yeah. I mean, I can speak to that. Like the counterpoint to that is Intel SGX. Okay, SGX, SGX is the TE. That's the TE. Okay, it has been riddled with so many exploits over the last decade that it is fundamentally broken. Okay, we simply cannot create a trustworthy TE today.
Right.
Now, I'm not saying we can't do that in the future, but now we start getting into the realm of moon math or, like FHEs or whatever, like stuff that can exist in the future that might solve this in other ways. And no one's saying that that's not possible. It's just that it doesn't exist today. Like there is no TEE that exists that is widely distributed except for SGX, and SGX is broken. Like it's embarrassingly broken. Every year at DEF CON, there's another SGX talk. It's just at this point in time, Intel should just stop producing it.
Interesting take. I was not expecting that take, but I will admit TE technology is a little bit I understand what's happening, but the actual fundamentals of like exploits and security are a little over my head. So that is interesting to hear. I think the other counterpoint is I think why not from just the basis of the protocol just be private is also an interesting counterpoint where Ethereum is great and all, but it just at its basis isn't private. Um,
Well,
so
at its basis, it's not accessible. It's very hard to use. It's default surveillance, and it doesn't help developers win. And those are the three things or the three and a half things where we believe that Tari can be meaningfully better. And it's not to crap on Ethereum in any way, shape, or form. It's simply to say, hey, look, these are a set of choices. These are a set of design decisions and trade-offs. And maybe with the benefit of hindsight, it would have been engineered differently. Like that's entirely possible, right? Like Tari is, emerging years and years and years later. We have the luxury of having this, being able to see how things played out, and therefore have an opportunity to contribute to something that we hope will be really impactful in these specific areas.
do you think while we see all these dexes basically playing on Ethereum and the other like do you see this ending up where you guys become an aggregator for a lot of this DEX volume because all of a sudden it's on chain and you can do these swaps, but they are private?
So one of the things we did is we started interviewing lots of like S-tier traders in the industry. And I'll never forget, I had one conversation with such a trader in Dubai. And I asked him the question. I said, look, how much time every week do you spend manipulating your wallets so that people aren't like pocket watching and tracking your activity because they know that you're like a famous trader? And they sat down and they're kind of like thinking about it. They're like, no one's ever asked me that question before. I said, okay, well, I'm asking you, so I'm curious. If you can quantify it for me, that'd be really helpful. He's like, man, hours and hours and hours. And I was like, wow, every week, huh? He's like, yeah, every week. And we started thinking about it. They're like, wow, that's remarkable. People aren't even aware of the amount of time they're spending just to deal with the fact that the systems are default surveillance systems to try to avoid people watching their moves. And if you could just have like your single wallet, whatever your trading wallet is, or if you have a couple wallets, whatever you got, it's fine, whatever. But know that no one can see what's happening. How does that change your behavior?
Right.
How does that give you more time either to trade, more time that you're not spending trading, freedom from it, or whatever you choose to do with your time. But it can give you like meaningful time back. It can enable you to implement strategies that you wouldn't feel comfortable implementing on a default surveillance system. So yes, do we think that there is an opportunity here to create a world where people have a preference over time, trading in various ways on something like Tari because of not only the confidentiality benefits, but also the usability benefits? The answer is yeah. We think that's possible, and we're excited about that.
Right. I'm curious on a governmental standpoint, and these are just to people that are listening, like these conversations are like so from the hip, and I'm just kind of like sitting here, and it's such a abnormal solution that you guys have built here that I'm just like, I don't even know how to approach the conversation in some ways. But let's take this way, the government side, and something that I think everybody has concerns about, and it's top of mind for some people, and for others it comes after uh the end of middle of April, which is taxes. The government likes to know, okay, what have you made, what have you traded? All of a sudden on a privacy chain though, I can go make all this money, and nobody knows what is it. And I've seen this term float around on X, and maybe it's not the right term, so I don't know, like, but like anti-Fed, it is like I've heard people say it's anti-Fed.
So look, I'll start. Tari is not anti-Fed. Tari is not here to like enable people to break laws. I think that's actually been one of the core issues with how privacy technology has been marketed in the industry. So we talk about this all the time internally, but look, there are two ways to sell a knife, right? You can sell a really, really, really sharp knife as a great way to cut food. Oh my God, it's Japanese steel, Hunter. It was sharpened by artisans using, many thousand-year-old rocks that came from this volcano, right? Like, or whatever, right? And you can cut anything with it. You see the videos. Hunter, have you ever seen them market a knife like that as a murder weapon?
I have not.
Okay.
I've not seen that.
Okay. Well, so to us, we don't sit here and say, gosh, privacy, that means break the law. It's like, no. If you owe taxes to the government, pay the taxes that you owe to the government. Like, and that's important. Pay the taxes. Like, follow the laws that you have in your jurisdiction, right. Whatever those laws are. That's not what Tari is here for.
Just because you own a gun for hunting doesn't mean you can go, break the law with it. That's a good point. That's a good counterpoint.
Like they don't advertise automobiles as murder, tools either. But like, look, if you're driving down the street at 120 miles per hour, is there a shot that you're going to potentially kill someone? The answer is yes, absolutely. But that's not how it's promoted. That's not how it's talked about. So the way we communicate this, we say, look, I want you to imagine Tari as a Coachella poster, okay? And you got, Ariana Grande or The Weeknd or, my personal favorite, Rage Against the Machine, as the headliner. You got the headline. Okay, then you got this random electronica tent in the corner. Okay, like not the main one. I'm talking about like the one on the corner, like the back by the parking lot.
Yeah, like back by like Sahara.
Yeah. And I want you to imagine like the lowest rung on the totem pole. There's some DJ. It's like, DJ, Reese's Peanut Butter Cup, or whatever the DJ name is for the DJ. And they're like excited, dude, I get to play Coachella, and they're on the list, but it's not the headline. just because Tari is default confidential doesn't mean it has to be the headline. It doesn't have to be. It's a feature. It's a feature of the system, and ultimately people are going to use it how they're going to use it. But we're not here saying that it should be used for ill intent or for people to do bad things or people to escape their obligations. No, it's like it's built to keep you safe. It's built to enable you to build successful businesses on the protocol. It's built to enable you to do things that you couldn't previously do. It's built to make you free, so you can actually be free and free in whatever your trading decisions are, your choices on chain, whatever those choices are. That's what it's here for. Just as much as the sharp knife is here to enable you to cut your steak, not kill someone you don't like. Right?
Makes sense. What I was not expecting us to get onto that. DJ, where do you come up, DJ?
I don't know. I don't know. Whatever it is.
His brain just works that way.
On the idea of headliners and who's in the disco tent down the street, can you highlight, I guess, like, as you guys are coming to mainnet here, you are going to have some headliners that are coming, I assume, and you're gonna have some IP coming and builders, etc. Can you, I mean, I don't know who you're allowed, if you can tell who that's gonna be. If not, can you explain, I guess, like the categories of what to expect and what the early days of Tari should look like?
I mean, I have a view on this, and that is the playbook that I've seen is launch an EVM clone, and then take the token, because you've got a giant token allocation, and give it to a bunch of projects to just fork their project and launch it on your EVM clone. And so then you end up with like, oh, well, here's our version of Uniswap. Here's our version of, like the usual suspects. Here's our NFT marketplace, et cetera, et cetera. It's very boring. And it's almost like, if you walk into any casino in Vegas, all of the casinos have got the same machines. They've just got like different themes.
Yeah.
This one's like, it's the $50 slot machine that's like water themed. And then this $50 slot machine is avatar themed. Like, it's not very exciting. It's just different themes. It's different skins.
Yep.
And Tari's not EVM compatible. So that already means we're not going to get the usual suspects. Okay. Nor are we trying to incentivize the usual suspects to bring their casinos over, because that doesn't really lead to anything. What we want on Tari are, as contributors, we want to create a culture that embodies and empowers builders who build beautiful applications. That's the first thing. Beautiful applications that are easy to use, and build real world applications. Applications that actually like touch the lives of ordinary people, not applications where we're basically just empowering the game of musical chairs that's happening in crypto, where there's no new money coming in. It's just trading hands, and people are slowly peeling, millions of dollars off.
Right.
I also think that I mentioned it really briefly earlier in this conversation, but I think there is a massive adverse selection problem with regards to the application layers of these protocols. I'll frame it to you this way. If you look at the last 4 Y Combinator batches, how many crypto companies are there in those batches?
It feels like it's gone up.
No.
Oh, really? No?
It's very small. It's like, I mean, I can verify this after this meeting, but it's like a handful max. So out of okay, if the average Y Combinator batch is, call it, I don't know, 150, 200 companies, something in that range. Let's just say 200 to make a easy math. So they now do 4 batches a year.
Yep.
So that's 800 companies. How many of them are in the crypto space? I would venture to bet you that it's less than 20 total for the year.
Oh, really?
Yeah. Okay, so why is that? Well, when you attend I don't know if they still do the dinners on Friday nights, but when I was in there, we do these dinners on Friday nights. The partners are cooking up, food for you or whatever. The thing that you would talk about with all the other founders and with the partners is how much you grew that week. How much did you grow? And if you're not hitting some kind of like meaningful double-digit percentage, like growth percentage every week, you're kind of dead. You're not going to be successful. And every startup's in their own level. Some people are pivoting and they got no growth for the week because they're just figuring shit out.
Right.
And some people are launching, and so everyone's in their own trajectories. But it's entirely like what YC teaches you is that the number one thing that matters is build something people want and go find a fuckload of those people as fast as you can and as cheaply as you can, right? Like, so that's the end. It's like build something people want and find them, right? And it's really fucking hard to do that on Solana and Ethereum and all that. Like, it's hard because you've got to do all the distribution work yourself. And you have two choices, basically. You only get to like vampire attack existing users. You basically have existing on-chain users, and look, it's a meaningful number of people. I'm not going to say otherwise. It's meaningful. But then, God forbid, you want to try to attract net new people, and now you're routing them through a KYC loop of some kind, and your conversion rate is going to be trash. So, first principle says, well, okay, how do you build native distribution into the core infrastructure around the protocol? How do you do it? Well, to us, it's very simple. We have this mining application called Tari Universe. It's beautifully designed. Well, the current version of it is very simple. It's just about mining. But a future version of it is going to have a native app launcher baked into the product. So now all of a sudden you'll be able to download Tari Universe, install it on your Mac or PC, run it with one click, start mining some Tari tokens on your commodity hardware, and have access to all the apps right at your fingertips that are built on Tari. There is no app store for Solana. Right. There's no app store for Ethereum. How do you search? Hunter, during this call, there could have been an app that launched on Solana. How the fuck would you and I know about it?
No idea.
We'd be like either chronically online, paying attention to the timeline.
Or you have to be in a Discord group or
Yeah, that's crazy. So basically what you have now is, I think it's very interesting. When a builder comes to a protocol and says, hey, I want to build this app on your protocol. And you go, cool, man, how can we help you? And they go, how about a grant? You're kind of like, why are you really here? Like, are you here just for the grant money? Because you want to like pay your rent, or like what's the situation? And look, I'm not saying that like investment isn't required. Obviously, like investment is required, but grants are challenging because the grantee does not necessarily have upside in you building something, right? Like, it should be a venture investment. It should be like you as an angel investor, me as an angel investor, Rick as an angel investor saying, oh, gosh, you got to build this amazing app. That's a great idea. And I really believe in you and your team. And you know what? I want to own a piece of that.
Yep.
Right. That's not called a grant. That's called an investment.
Right.
So to us, we think that the whole thing is kind of born wrong. And if you actually say, no, we're going to build native distribution into the protocol from the get, we have a North Star metric that the whole community can watch and see grow over time, which is the number of miners that are mining Tari. It's literally on the goddamn Block Explorer. If you go to the Block Explorer for Tari, it's like right there above the fold, the number of currently active miners. So people can literally watch this number kind of expand over the course of time, and then they can make their own decisions. Do I want to build an app for this group of people? Yes or no? And if you do, it's open source. Go get it. No problem. And then it's interesting because you can actually own your user base. You can build a moat around your user base. You can't be vampire attacked. You've got distribution baked into the system. It becomes a much more, I want you to put your angel hat on for a second here and evaluate two stories. Story A is someone who wants to build on Solana or Ethereum. They have no native distribution. They're going to be using an airdrop mechanism or some kind of token to try to get users. They're going to be paying their users a fucking fortune. There's going to be a bunch of Sybils, bunch of bots.
Yep.
Very little retention. Okay. Or a Tari builder who comes to you and says, hey, Hunter, guess what? I'm going to be a featured app in the app launcher for the month of whatever. And look, dude, look at the growth of miners. There's now like X tens of thousands or hundreds of thousands, whatever the number is, miners. You can look at it yourself. And look, man, all those people who end up being my customer, they're my customer. They're not going to be Rick's customer. They're my customer. I think it creates a completely different type of conversation from an investment perspective. And that creates a new generation, a new style, a new vibe of builder to want to come into the Tari ecosystem versus all of the other protocols.
We've seen this a little bit, a flavor of this with Abstract so far.
Sure.
Who obviously Luca and you guys have had conversations, and
Of course.
but I think there's a lot to learn from. Okay, when there is a central hub to discover, and to find and to feel like, okay, this is, I didn't have to be in some chat and have exclusive access. It was there for me. It works. It solves a huge issue of, okay, not only am I building technology, but I also have to become a marketing company.
Yep.
And figure out how I'm going to, go attack basically you end up like having to figure out, how do I attack my competitors?
Yes.
In some sense.
Yeah.
It changes things.
It
for
changes
sure.
things. And you not only have to be a marketing company for your own product, you have to market the chain too. Which is, it's like, wait, I woke up and I was like, I'm going to build an app on insert chain here. And it's about my app and my brand and my story and my product. But, it's so weird. It's like, but I got to sell them on Solana too.
Yeah,
Like,
it is weird unless you are like, unless you're on like doing it on a chain where it's like, okay, natively we all get it, we like that
Yeah.
chain. You at the end of the day end up becoming a marketing arm for, if you're gonna build. I'm not gonna name any, act like they're not good, but like,
No.
yeah. At the end of the day, you're like, okay, fuck, I have to convince people to make a wallet here, or if they're already on it, to like why they should move more capital over,
Yep.
or yeah.
That's right.
It's there are misalignments, and it's very, very exciting to see that you guys have said basically, fuck it, we're doing it this way. This is the better way.
We don't know if it's going to work. Okay, this is a set of experiments. We're out here swashbuckling, trying to figure it out, But I think that I have a very, very strong belief, very high degree of conviction that we're attacking the right problems, right? Like, these are the problems to attack. Make it easy for people to get into the damn thing. Yes. Make it private. Keep people free. Don't let everyone become a fucking hunter. We don't want everyone to be an NPC, do we? Like, no.
It doesn't work that way. It does not work that way.
Let people be free and protect businesses. Let businesses build valuable fucking things. It's not just about the value of the protocol. It's got to be about the value of the things built on the damn protocol. And then give the developers and artists and everyone else distribution.
Yeah.
Let them celebrate the fuck out of them and make it about them. And I don't know, man. It doesn't look, this isn't rocket science. I'm not the smartest guy out there. Look, I'm walking around with a high school diploma, man. Okay, I'm definitely not the smartest. I'm not the brightest bulb in the pack here. It seems pretty obvious to me, and we have a lot of conviction in it.
Yep.
And that's why Tari exists.
Well, you are a smart person. We all know that. You're very humble, but you're also surrounded by very, very smart people and very dedicated builders.
That's true.
And that is
true.
Look, guys, I've enjoyed this conversation so much, and I appreciate your time coming on here. I'm excited for Tari. Mainnet is weeks away, maybe days away. I don't know. At some point,
weeks. Yeah,
weeks.
It's not a stealth launch. There's going to be ample notice. It's very important. We're getting closer to being able to share the date with everyone. It's weeks away, but the target is April. It's still April.
And you guys will have a TGE at some point down the road, correct?
Well, so this very interesting. Tari L1 is proof of work, so there's no TGE. There is a Genesis block that's mined, and from that moment in time, people who are mining mainnet tokens. So there's no like magical room where someone's going to hit the button and all the tokens now come into existence and are like born from the birth of from someone's keyboard. It's like, oh my God, I made all the tokens. It's like, no, there's a Genesis block that's mined, and then the community is securing the network and getting paid a reward along the way, block by block by block by block. So the network builds in a very organic, authentic fashion.
A good clarification. I know a lot of people I was getting messages like, when's TGE? What's going on here? So a clarification. I don't know if you guys have anything else that you want to leave us with, or any alpha insights, hints at what to expect as we get closer to mainnet and the future.
Rick, anything cross your mind?
No, I mean, nothing. Like, Tari's coming soon, or launching mainnet soon. There's a lot of fun still to be had on testnet before launch, and like, pitch up, help us, and let's have fun. Let's build something cool.
Yeah, I just want to say thank you to Hunter for having us.
It's nothing. It's
super fun conversation, bro. We love you, really appreciate you. We're huge fans of you, and very grateful to be here. And we want to give a huge thank you to the whole Tari community. Mining on the testnet is for people. Some people have been mining on the testnet since October, and this is hard. Like, this is something that no one has done before. So the testnet has some like ups and downs. It's Hunter. It's not like we can just spin up an AWS instance and fork OP and be like, yo, here we are. It's like,
like I said again, you guys haven't just gone and been like, okay, we're gonna clone what's been done already and make it 5% better. You guys are venturing into new territory and having to go back and take even stuff that's been built before, like
of course,
data pool has been done,
yes,
but not like this.
100%. So we're building on the shoulders of giants here. We're not suggesting that we invented time travel. But this specific form factor has not been done before and has many, many, many unique challenges. And so we're very deeply appreciative of the whole Tari community for rolling with the punches, continuing to help us battle test this testnet. This is a real testnet. We're all testing it together and making it better and better and better by the day, so that when mainnet is here, it's ready. And it's always going to be a work in progress, but it's in a place where we all feel really, really good about it as a community. So yeah, we're just very, very thankful, and this is so much fun being able to contribute to a project like this with Rick and all the other contributors and the community. So that's it,
guys. I can't wait. Obviously, I'm a fan of what you guys are doing. You guys have been vouched for by a lot of people that I highly respect, which I think I should make that clear. And I'm just excited. I think innovation needs to happen. We need to think contrarian in the space, and that's what you're doing. If you haven't, you're listening, please go check them out. Go find them on Twitter at Tari. Go download, just experience it. I think that is part of also why this conversation is so important. Just because it's different, just even if you're like, I'd never use that, or I don't, just go experience what these guys have built. Because it's, for me at least, it made me think of some things differently. I think you guys have put so much time into the UI and the user experience. Again, even if you've heard this and you're like, I don't get it yet, please take the time to check it out. Guys, thank you so much for coming on. We'll have to have you back on after mainnet. I'd love to have an update conversation and get to know more once things are underway. But I'm looking forward to it, and again, just thank you.
Awesome, Hunter. Awesome. Have a wonderful day, man. Thank you so much for having us, and we'll see you really soon.
Amazing. Well, thank you everybody for tuning in, and we'll catch you on the next one. Cheers, guys.